All right, ladies and gentlemen, today is Wednesday, September 9th, and I'm back with another edition of the live show. Welcome. Been kind of a wild week, and so we're going to take a look at a few different things. And as you probably know, all those open trades that we had, except for one, have been closed. And so that's pretty hey, that's the way that things are supposed to work, right? And so last week I talked about the fact that there were very few pending trades and a whole bunch of open trades. And so I will also take a look at some of the closed trades, that batch of closed trades that just got closed, and show you some kind of cool stuff as far as how the system works and handles the sell-off like we've seen over the past few days. So anyways, let's dig right in here. S&P got a little gap up in the bounce this morning, which kind of makes sense. You know, typically you see like a big 3-day sell-off like this. Quite honestly, in the past, I guess it doesn't really matter right now, but what you really want to see is a gap down, right? And then you can almost certainly expect a rally up. But I guess that's almost so obvious, you know. Like look back over here. Look at how it worked. You know, these 3 days here. This is kind of typical, but of course, you know the market actually got kind of oversold here. I'll show you that in a second. But take a look back here. You can see where you get a couple of big down days, big down move, and then you can see how this day it closed off the lows, but the following day you got a gap down, a little followed through to the downside, and then a rally, right? And then kicked off another rally. So it'll be interesting. His trend line got broken a little bit, kind of a little fake out. You know, the best bet is to best bet is to draw a real nice big thick sort of trend line like that, because just because a trend line gets broken by a couple of pixels on the screen doesn't mean that it's a violation. I mean, if we had got like a open this morning and then another break there, and you started to see some actual price action below that trend line, but so we're not seeing that yet. However, um, you can keep an eye out for that, right? If the market starts to break down, you start to see a bunch of price action below that trend line, that would be considered a violation, right? You guys remember, I think last week I had a trend line drawn like that. It's a little more difficult to draw that, but there you go. So, there's another trend line off of a couple other lows, and then it was kind of like this, draw another trend line like that. But really, what got crazy was this move right here, right? That was sort of the that was sort of the parabolic move, which culminated in what I would consider to be sort of a blow off top. Now, what's interesting about this is the RSI. I think I mentioned that, right, on last week's show. I mentioned how the RSI was pushing the envelope, so to speak. And quite frankly, that particular day, a week ago today, the RSI on the S&P closed at 82. You can see it up there in the left-hand corner, right? 82. I mean, that's kind of pushing the envelope, right? I mean, remember I mentioned that, back in the old days, RSI 70, which is this red line right here, the thick one. RSI 70, typically means that the market's overbought a little bit. And that doesn't mean that the market can't stay overbought for a long time, right? We all know that. However, if you've studied technical analysis, you know that the market, they say the market can stay overbought longer than you can stay solvent or whatever the old saying is. But anyhow, you start to push the envelope when you get daily RSI, over 80, I would say, or even close to 80. So, no, and there was a few times back over here, back last year where RSI managed to get, kind of what you would call extremely overbought. And there was a few little dips there too. So anyway, I mean that was kind of a little bit of a warning sign, a little bit of a red flag there. And to me, just the sort of the angle of this parabolic trend line and this run up here, which ended in a big sort of long range day up at the highs there. I mean, that was pretty amazing. Let's look at the SPX is kind of interesting because you had this previous high back here, and if you look at where we are right now, S&P is like right, I mean, it's right at that previous high before the pandemic sell-off. Right? So I mean, this whole period of time, we're just kind of back to where we started. What was really amazing was some of the sell-offs in like the sell-off in like the Nasdaq 100. So here's something that's kind of interesting is, back over here in February, this was the all-time high for the Nasdaq. Actually, let me go to the actual Nasdaq. Yeah, I don't have anything drawn on here, but yeah, pretty crazy. Okay, so what I was looking for is this on the Qs. So anyway, this was the all-time high right here, and then we got the big sell-off and rally, and so I marked this red line right here. That would be a 20% sell-off from the highs. So what's kind of funny about this is that this was the all-time high, and then you had the sell-off and then this rally, and now if it came back down here, that would theoretically be a bear market, minus 20%. So anyway, it is what it is. Apple. Look at a couple of these. Yeah, look at Apple. Look at the bounce on. Whoops. Look at the bounce there on Friday. That was pretty amazing because a lot of the other tech stocks sold down and didn't quite bounce like Apple did. But look at the gap down yesterday on that. That was extraordinary. And of course, everyone's talking about Tesla. Tesla. Yeah, I'm wanting to say it was down like 21% yesterday, but look at the gap. Right, there was the close on Friday, and then of course it was a 3-day holiday weekend. Look where that open was. A lot of people expected Tesla to get added to the S&P 500, and it didn't. And that was kind of brutal, honestly. So yeah, let's look at some real quick. Just peruse some of the other big tech stocks. Microsoft's getting a decent bounce. Netflix, there was a gap up this morning and a sell down. Facebook kind of hanging on there. Yeah, it's gonna be really interesting to see if this little gap up rally that we're seeing today holds. So, and we've also got this other sort of phenomena where the Dow, the Nasdaq, and the S&P all look different, right? I mean, if you think about it, so the pandemic sell-off and the rally in the Nasdaq just blew through the previous high, and it would have to pull back more than 20% to be back at the high. The Dow's never hit a high yet, right? Worse yet, they reconstituted the Dow so that they reconstituted the Dow so that now, like, the Dow here is not the same Dow as it was back here, and there's three different companies, and so anyway, that just kind of makes everything even weirder. But that's just the nature of the business. So, but anyway, the action's starting to pick up, which is kind of cool. That's always fun. I mean, typically, like next week, or even the week after. Usually it's like a week or two after Labor Day, mid-September, you start to see the action pick up in the market after, a dull summer. And it was pretty dull. I mean, there was a lot of like just little narrow range days. I mean, look at this day right here. 8/17. I mean, that was like a day. I probably went to the beach that day, but and I did that a lot. I mean, there was a lot of days that were just real sort of, the market would gap one way or the other, but there wasn't a whole lot of price movement. We started picking up a little bit, and there was some decent days in July. There was some decent, long range days, but August was August was an unusual month. It just sort of drifted up each day. There was barely a couple of, days with some action to them, but anyway, so the action really started picking up. Really, this sort of on 9/2, right? That was kind of interesting. 9/1 and 9/2. Those were kind of exciting days because the market had put on a rally in that. So anyway, you probably heard that SoftBank was loading up on the. It was everyone knows it's been a narrow market, right? I mean, the market was kind of being held up by Apple and Microsoft and Facebook and Google, the FANG stocks and all that good stuff. So it was a narrow sort of leadership. And then the news comes out that SoftBank had loaded up on those stocks and then started buying a bunch of calls, right? Uh, and all that call buying really kind of goosed the market or whatever. But, and then once that happens, I guess they need to unwind it or something, and that's what we've been seeing here. So anyway, hey, so far so good. As far as like yesterday being a pivot low, but people get really excited. You get the first like big down day you get, and even like the second down day, right? You see how it closed, like it closed above the middle of the range on Friday, and so, a lot of like premature dip buyers think, okay, well that was it. The worst is over, and so we're just going to head right back up, and so and then yesterday happens, right? And so you get the same, you can get the same sort of thing here. Everyone's so used to the market going up every day, and these like short sharp sell-offs and then V reversals like happened back over here a couple times. um, and so, it's going to be interesting, super interesting to see if yesterday's low holds, but so far so good. So anyway, look at how real quick before I get to like our stocks. Look at how the RSI went from 82 down to yesterday's close was 42. So the market kind of got oversold really quick, right? That's sort of interesting to see the RSI just plunge like that, but I guess it kind of does really. Talk about oversold. Look at this, and this is like super interesting too. Back over here when we had the pandemic sell-off, which was what, roughly 40%. Depends on whether you measure it from intraday high to intraday low and which index you're talking about, but it's average about 40%. But look at how the RSI got all the way down to 20 on the first little sort of dip there. Right. No, and I mean it was more than a dip because these were days where the Dow was down like 1,000 points or whatever, and then you got that bounce for a few days, and then the next leg down. But you can see what the RSI did. It's kind of interesting that at the dead low there, the RSI only got down to 30, right? That's sort of, so you had sort of a positive divergence. I don't know what to make of this. This is just. But anyway, it's showing you the RSI is kind of oversold here. So we'll see what happens. All right. So anyway, let's take a look at. We have one open trade here in Honeywell. Let's take a look at that real quick. And then what I'm going to do is take a look at the closed that all those closed trades. Honeywell hanging in here. Interestingly enough, so here was the trigger back here, like where it broke this trend line and then it gapped up a little bit. And so you can see it's kind of been stair stepping up. This gap right here is when they added it to the Dow, right? Kind of interesting that they decided to add Honeywell to the Dow while it was an open trade here. But so you can see that after that happened, the trailing stop, which started off way down here, trailed up a few times. The trailing stop went just up under the lows of that gap, and lo and behold, I've extended this several times, and it's still sitting right there. Trailing stop 163. So far so good. All right, and of course the target was here. The gap target would have been a little bit higher, like compensating for the gap. If you got in here, it would have been a little bit higher, but still, still looking pretty good here. So that's as long as that gap holds. And the funny thing is that if you look through enough charts, you'll see charts where you get a gap up like this, and then it just never looks back, right? And I mean, you can go back long way, and that old saying about gaps getting filled is to me it's you can always find exceptions to the rule, and I've seen so many charts where a stock just it gaps up, takes off, never looks back, and then it gets so far away from the gap that probably never get filled. So there you go. There's still a gap from back around the election on the S&P, so that hasn't been filled yet. So, and that was 4 years ago. So anyway, I can't go back that far in a daily chart. So anyway, so far so good. It was looking a little dicey yesterday. The trailing stops at 163, and the low was 163.30, and this would have been one where any further weakness today would have obviously knocked this out. But there's worse things than getting knocked out with a trailing stop. Way up here as opposed to around the entry, which brings me to the closed trades here. There's a few really interesting things on the closed trades that I wanna point out. There's some really good examples here. The first one looks like a full stop out. So let's just take a look at that. Oh, and what I wanted to mention here is that look at the dates on these, like 9/3 all the way down here. So, and then there was a couple like 9/2. So you got 2, 4, 6, 8. You got 10. We had 10 open trades that all got closed on this recent sell-off here. The first one, RTRX, yeah, decent little pattern or whatever, and just couldn't get anything going once it broke out of this channel. Looked like it was gonna go, and then full stop out. Stop never had an opportunity to move up. So let's move down the list here. This one's pretty interesting. So that last one, it was 7% stop out, and this one was roughly a 30% gain. So that's just how it is. That's how things work. What's cool about this one is how how the trailing stop basically sort of hung back, and then and you can see, where it just you see where the trigger is, you can see where the target was. Yeah, this has been one of the bigger gainers that we've seen in some time. I'm looking down the list here. Yeah, I mean this was the big winner out of the last batch. 32%. And the trailing stop on after this run up here and that sort of big gap up, trailing stop went right up under that gap at 117. You can see that there, right there. Trailing stop 117, and see how low that day was 117.07. And so the next day, it gapped up a little bit and hit that trailing stop. So I mean, this is where it got taken out, and look at what it did here. I mean, this is kind of typical. Like, stock kind of went up and up and up and up, and then just got hammered. And so this is very typical. We see this on, several of the charts that we're about to look at, and so I mean, that's sort of imagine that you bought the stock back here, right? And rode it up and rode it up and rode it up and rode it up. We're just like, kind of buy and hold. And then, I mean, you'd be feeling okay today as a very volatile stock, but just imagine, and somewhere, I think on the blog or whatever, we talk a lot about, not letting profits evaporate, not letting a nice gain turn into a loss, and basically the theory of why we use a trailing stop, and this is a perfect example. And better yet, the system, it doesn't always do this. I mean, it's not always going to catch the top like this, but in this particular case, it did, which is pretty amazing. So let's move down the list here. The next one is Nike, which, as I recall, was very similar. Nike had the trigger was way back here at 97, 80. This is one that basically triggered, at the like right at the trigger price or whatever, and within a few days it hit the target, which was over here. The target was way down here. Just kept going, kept going. You can see the progression of the trailing stop as it moved up and sort of kept us in. Interestingly enough, that was a pretty big run up there, and so when we got to this level here, the trailing stop looks like it kind of went right under the low of that day, similar to what we just looked at, and then you can see you had a few days of consolidation, and then the trailing stop went under that low, and then lo and behold, right up there near the top, same thing. Now, of course, this particular pattern here, if for whatever reason the market decides to just go back into rally mode, like we just had a sharp sell off, and then everything starts going straight back up, which is entirely possible, then I mean, this could actually keep going up, but you can see how the trailing stop managed to protect the profits. And so this is a little bit different of a case because several of the stocks that had a 2 day sell off, continued down, and a lot of them, a lot of stocks gave it all back. So, but yeah, that was another like really good trade. 17% gain between the trigger price and where it tagged the trailing stop. And that's how everything's measured. Like when you go to the closed trades and you look at this min column here, that's how that's measured. The max column shows like the maximum distance the price moved from the trigger to the high, but the min column would show if you entered at the trigger price and did nothing but follow the trailing stop, that's the minimum that you would have theoretically captured. So let's see here. MSCI. This is an interesting one because, and this is a great example of, generally speaking, I don't need to explain or convince people why to use trailing stops like the way that we do, but once you've been doing this long enough, you reach a point where obviously stops are in imperative is the word I was looking for. Using a stop loss on a trade is imperative because if you get in the wrong stock at the wrong time and just buy it and don't use a stop, well, you can get buried in that stock forever, right? There's stocks I could show you blue chip stocks you could have bought 20 years ago at the wrong time, and here we are 20 years, big brand name companies. Intel's always a good example. Cisco, I mean, there's a bunch of them, but there's a lot of big brand name companies that back in the dot-com bubble 20 years ago, you could have bought them at the height of that bubble, and hopefully they paid a dividend. But you could be holding them 20 years later and still be underwater. Is a great example. Boy, I'm sure that there was a lot of capital destruction in GE because, back in 2000, the big run up in the late 90s, GE was like one of the premier blue chip stocks, diversified companies. I mean, everything about it. And, but anyway, point of that is that, we use stops. You should always use stops. And the way that our system is designed as a swing trading system is that, the system trails the stop up along with the price, and that's how we get taken out. So here's a case where, you had a decent pattern, everything was looking good, it was forming that cup, almost made it to the target, and then of course, the hammer dropped in the overall market, and this is kind of a typical price pattern here. So a trailing stop basically, it was a couple of bucks higher than the trigger or whatever, but basically, break even trade. So that's what it was designed to do. Moving on, this FSLY, kind of the same thing. Everything was kind of looking good here. This was a pretty hot stock too. And everything was looking good. And, the thing of it is that it actually, and it was a weird one, but it actually tagged the target or whatever, but came back and hit the stop. And the stop was a little bit over the trigger price, although there was this gap up here. So so basically it was a sort of a wash or whatever, not a big deal, but it wasn't the kind of damage where it came all the way down, hit the initial stop. This was one that hit the initial stop, like hit the. This one was kind of funky anyway. I think I mentioned that I wasn't real fond of this pattern just because the big run up happened kind of right. This might have been like a earnings gap up or something, and big long range move. But a lot of times you'll see a move like this, and then once it's sold down to here or whatever, it just wasn't that pretty of a pattern. Now, if it had broken out of this pattern like up here, it would have been a different story. Like like right here, if it would have broken out, then that would have been like a beautiful, sort of flagpole type of breakout or whatever from up here. But the fact it broke down, it actually formed kind of a bear flag right here. And so I wasn't real keen on this. But anyway, the point of this is that this thing triggered in, it hit the full stop, right? But it protected it. This was 3.3%. Right? So, anything 3-4% is nothing. If you get stopped out at 3 or 4%, you should thank your lucky stars, especially because this can show you what happens. And I know most of you guys have been around doing this for a long, long time, but there's a whole breed of novices and new traders out there that haven't, they haven't witnessed a sell off like we just saw. And so, I imagine that there's some pain out there from this sell off. So here's an interesting one, and this is one that you could really use as a good example of how to sort of take everything with a grain of salt. So let's look over here. ATUS, this one right here. Notice that in the minimum column here, like it's showing up as a loss, right? Shows up that that this thing that this basically it's in gray. The ones that are in gray are ones where the minimum price movement where basically it got stopped out below the trigger price. Is what I'm trying to say. However, um, it did hit the target, right? So when you look at this, a lot of people like to look and say, "Oh, geez, well, look at all these stop outs here. Look at these losses." But the funny thing about this is, in real life here, if you basically followed the strategy, you got in, even on the gap up or whatever, and took some off at the target, then it basically turned out to be, I mean, the stock went up 8% from where the trigger was. And so, of course, there was a little bit of a gap up here. But long story short is, if you followed the strategy or whatever, this actually probably would have did turn out to be a profitable trade, right? Because you would have taken profits. On the first half at the target, or you could have sold, you might have sold the whole thing at the target, and or even compensating for the little bit of a gap up there. It definitely hit the target, right? Kind of blew through the target, honestly. And so there was plenty of opportunity there to take half off the table, and then basically, this trailing stop was what, 20 cents below the trigger, a little bit more below the gap there. But so the second part of it would have been kind of a wash, right? Um, and Akamai, which I believe, let's see, Akamai. Yes, the second to last one. It's the second to last one out of the 10 that we had closed in the past couple of days. This is an even better example. Now, obviously, we would have kind of hoped that the trailing stop would have been like way up here, but it didn't have the sort of run up that a couple of those other ones we looked at earlier did. So I mean, it is what it is. The system is programmed to sort of have a mind of its own. But I guess this is probably the best example of all. So the trigger price was 110. It opened the following morning at 110.85, and so if you just pulled the trigger at the open and bought it at 110.85, like I discussed, before, this would have been the target that compensates for buying it above the trigger, right? So it hit that target right there and kept going. And the trailing stop kind of meandered a little bit, right? At this point, this probably, well, I don't know, this probably belongs like over here, but anyway, the trailing stop made it up and was basically like, at the target by the time that this dropped. One more day, like if this hadn't dropped and hit that trailing stop this day, then this target would have likely come up to either, just under the low of one of these 2 days right here. So the trailing stop is a function of price and time. And so basically that's how it is. Interestingly, Akamai had, there was a decent trade over here too, right? Back in late June, early July. And so if you look at the chart, I mean that was a great run up, and the system caught it right on as it was sort of starting that leg up, right? And then you can just see how fast, Akamai big tech stock, you can just see how fast that these things can drop when they pull the rug out from under them. So anyhow, this is like a perfect example of how everything's supposed to work, and it worked great. So from here to there was like 9%. From the trigger price to the actual trailing stop was only about just under 4%. But anyway you sliced it, so if you got in and took a half position off the table at the target, basically you watched it run up, and then of course you're always free to use a tighter stop than the system is showing, because the system is theoretically it's designed to allow for normal price fluctuation and volatility and even pullbacks in an uptrend and sort of keep you in it. as you know, as long as possible, because sometimes we do see that where you stock, initially. Well, Nike's a good example of that, right? Nike was a pretty good example of how, of how it kept you in through the volatility, like over here. Certain case, you had this big run up, and then that was, relatively significant pullback, but the trailing stop, was down here at the time, and then it just kind of ratcheted up, and even over here, well, that was, it wasn't really a pullback; it was consolidation. But so that's just a good example of. Let me go back and look at this one. This is probably a better example, right? Of because you did have a couple of pullbacks here. I didn't, for whatever reason, I don't have the initial stop marked on this one, but it would have been down here somewhere. So, it ran up, and you had a couple of really volatile days here, right? But the trailing stop was down here, and then when this run up, it was here. But this is an actual example of what I was talking about, where the system is designed to keep you in for an actual pullback. At the time of this sort of little wedge pullback here, I'm trying to draw my lines a little bit better than I had them. At the time of this little pullback, the trailing stop was down here, basically below it was still hanging back here from these previous lows here, and then you got a nice little pullback, and then the trend resumed. You had the little 2-day pullback here, and the trend resumed. And so, point of it is that the trailing stop is designed to allow for normal pullbacks, normal price volatility, and keep you in while still trying to, the point of the trailing stop is to be able to ratchet up, ratchet up, ratchet up, and keep you in for the bulk of the move, right? So it is what it is. Real quick. All right, so that's basically it. Oh, there was one more. This mRNA. Yeah, this one I actually had high hopes for, because it's one of the COVID stocks or whatever, and it is what it is. So there was false breakouts all over the place on this one, right? And I mean, there was even like good news a couple of times, and all kinds of stuff. But here's another case where it just basically triggered in, and then couldn't get anything going. There are several ways to draw this line, and of course, some people if you use candlesticks, you tend to draw trend lines a little bit different over the bodies of the candles. But anyway you slice this was just a fake out breakout right here, and big 2-day move, and then it just couldn't get anything going. But you can see that that protective stop right there was a good thing. So that was another full stop out. Um, it is what it is. And then there was this one other one here, this Ballard Power. This had a really weird sort of behavior. It actually had some extreme volatility in the few days following the trigger, but it did hit the target, and the gap compensation target. And so this is an example of why it's a good idea to actually set is to set limit orders, in for the target sell, and then that way you don't have to babysit or even watch it, right? And we kind of designed this system so that you didn't have to sit in front of the screens all day, right? People have other stuff to do. They're busy. They want to swing trade. I mean, you can kind of be as but there's no need to micromanage this stuff. So anyway, my point is that you could have entered this, at the trigger price or at the gap, or split the position like we talk about, and then you could have set your sell order in, set your stop, set your sell order, and then when the target's not going to change, right? The target is the target, and so that's just a good example of it's a good example of the idea that, you can just set that target sell. A one cancels the other. You got your stop set, and you got your target set, and you just let the trade play out and just adjust the target when the system raises the target. So back to the open trade here. Yeah, and so it's not a whole lot of work on some of them now. It's a little bit of work, checking the thing like at night or in the morning and then adjusting that target. And depending on how many open positions you got, it can be a little bit of work. But for the most part, um, something like this, the stop loss on Honeywell's been, just sitting there for a couple of weeks, and so far so good. So, all right, real quick here, we're going to jam through um, the pending trades. Real quick, we'll jam through the pending trades. These are all new as of yesterday. Now, there was a few on there. There was a few pending trades that may have dropped off, right? Because that's basically how it works. Is that you got a pending trade. It hits the list for the first day, and it's typically in pullback mode. And if it continues to go into pullback mode at some point, based on the way everything's programmed, it'll just drop off the list. So let's dig into these and look. I looked at this. I looked at this morning and decided that really this was one of the better, like back over here. You guys have been around for a little bit. Remember the trade we had in this and how it just triggered in and just ran up spectacularly. Got out right up here. So there's been a couple of trades in this, but anyway, as of right now, the system's seeing a sell off, and the trigger's up here, but I hope this doesn't trigger in. I don't think I would take this. This is a case where you can use a little bit of judgment, because the idea is, let me zoom out on this. So triggers at 51 here. Here's the idea, the concept of you get a stock in an uptrend or whatever that meets our criteria and then has a pullback. And then what's supposed to happen is that, it's supposed to like sort of bottom out, like down here. It had a big pullback, and then it kind of, it triggered just above a congestion level, and then but anyway, this is supposed to like drift down, drift down, drift down, and like meet the price, down near the pivot lows of the pattern or after a period of time. But every now and then, and of course, the system is just working with numbers, so you can't see the chart. And I can see the chart, and I can tell you that hopefully what would happen in a case like this is you'd get another sell down and consolidation, and then this would drift down, drift down, drift down, and meet the price like, you know, over here. So, I mean, not everything happens like it's supposed to, obviously, but this is just an example of where, this is kind of how the system was kind of designed for, more of a pattern like this. And so, when a stock first hits the pending trades, the trigger price always going to start off like really high, with the idea that as time goes by, it's going to drift down and meet the price, down near the pivot low or the pattern low, like it did over here. So anyway, that one, I'd probably stay away from that. There's much better ones, right? Now Etsy, didn't they added Etsy to the S&P? This is a much better looking pattern, much better looking pattern. But here's the thing: the trigger price on Etsy right now it's starting off way up here. Same concept, same exact concept. What the system is ideally trying to do is you get the sell off like this. you get some consolidation, you know, you get some consolidation, like say down in this area, right? And then like say, over here, say like over here out in the future is where you get like maybe something like this, right? And I mean they're all different. Sometimes you get a pivot low, sometimes you get a consolidation zone. I mean, just each one's different, but the concept sort of is that, chops around. And meanwhile, each day, this comes down a little bit, comes down a little bit, comes down a little bit, and then here's where you get triggered, like, like right here out in the future. And so and that's kind of a weird concept for people that are new, but after you've seen it happen a bunch of times, then it makes more sense. So anyway, I'm gonna leave that trigger right there. I'm even gonna put it on here so that when we come back next week, trigger 130. When we come back next week, we'll look at this, and depending on what the price does, I mean, it could just rally right back up, or it could keep falling or whatever. But depending on what the price does over the next week, I think this would be a really good example of why of how you want to look at a stock, like when it first hits the pending list, right? Because somebody that comes in brand new thinks, geez, this stock sold off, to 100, from 140 to $100, and then, why would I want to buy it at 130? Well, that's not going to happen. You're not gonna get triggered in at 130. You're more likely to get triggered in, down here somewhere, depending on how this, you know, manifests. But this trigger price is going to drift down, and so theoretically, if you got a really nice like consolidation period here, say for, a period of time, and then it turns, right? Like I say, you want it to meet the trigger price that's going to come down each day towards the low of the pattern. So let's move on to the next one. Um, Same sort of thing, you know. Here's one that looks like it never triggered in, right? So you can also, this is like might be an example of why. Let's see, 52.75. Well, anyways, this is some of them won't trigger in, right? And for whatever reason, I mean that was actually a pretty decent pattern, but it got a little shifty there. So you got a pretty nice sell down here. This is a great example right here. The trigger price on this is 81 right now. Right? So, I mean, that's just this is a great example of what I was just talking about as far as the trigger price, like sort of and this just hit this just basically hit the pending list last night, right? So here you go. So obviously this thing's not going to, be back at the high tomorrow. I suppose it could be, but it's not going to be back at the high tomorrow. And so the point is that this trigger price from when it first hits the list is going to drift down, drift down, drift down, and theoretically you'll see some consolidation here, and then it'll meet the price at a lower one. The last one here, very last one, much better example than actually any of those. So this is actually pretty nice. Right now the trigger's like up here. Trigger's up in this area, and so what theoretically what you want to see is you'll see the trigger come down maybe into that area, and so what you'll get is you get a sell off, right? Actually, a little pullback. So nice run up, nice orderly pullback, and then say yesterday turns out to be the pivot low, and you get a resumption of the uptrend, and so like right now it's up here, right? And so it's going to kind of come down, and then theoretically, like, next week, and depending on what this does, but theoretically next week, if you get a resumption of the trend, then the trigger will actually come down and meet the price. It's kind of like say this pullback right here, kind of like what we looked at just a minute ago. Say it went into this pullback mode and came onto the pending list, and the trigger was all the way back at the previous high, and just like the one we looked at a minute ago, you think, well, that seems crazy. And then the trigger sort of comes down, and then lo and behold, you get that same sort of move that I just drew on there, right? Get that same sort of pattern there, and that's how it's sort of designed. And so that's just kind of a refresher. The point is, don't get freaked out when you see something come on the pending list with the trigger price like way over the current price, because conceptually that's how it's supposed to work. And so anyway, the other thing is that keep an eye on that trigger price too, because it can and will change on a daily basis depending on what the price. And now, if the stock doesn't really move much, the trigger may not come down much, right? So, and the other idea is that if this stock, if this stock just kept going down, there's a point down here somewhere where it would just be gone from the list, say. Right. So if it doesn't turn the corner and meet the trigger price, on a resumption of the uptrend, and just continues to fade down, then at some point in time, depending on how all the technicals and line up, boom, it just disappear one night off of the pending list. So there you go. I won't keep you any longer because there's not that much else to talk about, right? So I will put this. Let's see. I'm gonna put this back up. Back up where it goes here. There we go. Right around, right in that area. I'm gonna put that back up there where it goes, and just so we can come back next week and see how this one played out too. So this is actually setting up pretty nicely. It really is. So, here's the other thing is, like, every now and then we've seen it. This thing could like trigger in, on Friday, a couple of days. You get a couple of big up days, it triggers in or whatever, and still works, right? But just like over here, but ideally, you kind of get it as close as possible, sort of to the where it hasn't moved too far off the lows. So anyway, hey, thanks for tuning in. Hope you enjoyed it, and be careful out there. Always have your stops in. And right now, I mean, this is the perfect time for a swing trader, right? Everybody else out there, buy and hold people, or people who got sucked in at the top and that type of thing. And so, I mean, basically, we just on that big run up, and at the beginning of the pullback, you can see that all of our open trades got closed. And so, in theory, if you're just following the system, you're heavy, heavy, heavy in cash, right? And waiting to see sort of what happens here. And so there'll be some other really good stocks, I think, that'll hit the pending list over the next couple of days. Hopefully the market doesn't just like, turn around and rocket back up. Best thing that could happen right now is some consolidation down near the lower end of the range, and that'll give a lot of stocks time to set up. I mean, if a stock just plunges for, 2 or 3 days, that doesn't just, automatically set it up to hit our pending list, right? And so I always say that what the system is kind of doing mathematically is a function of price and time. And so I think that gets lost on a lot of people, that the market tanks 1 or 2 days and they're itching to buy the dip, and a lot of times, what happens is that there's a washout that happens for the early dip buyers. And so our system is smart enough to know not to just rush in and, throw a dozen stocks on the pending list, because once a stock hits a pending list, if it rebounds enough, it's going to get triggered in. But after a sell off, you generally speaking don't want to get triggered in prematurely. So, anyway, keep your eye on everything. Maybe we'll see some new stocks hit the pending list. And so far, so good. You should be heavy in cash right now and feeling pretty good about it. So, thanks for tuning in. I will see you guys here again next week.